Since Bitcoin's crash of 21% after the ETF announcement, Bitcoin has gone into a holding pattern. This has caused some cryptos to begin to pull back, but as we know, this is the opportunity for the market as we lead into 2024 and of course 2025. As we've covered here on the channel, which is why you should hit that like and subscribe, looking at the cycles themselves for crypto, Bitcoin, and the stock markets, we can see that there is a lot of potential for later this year, but we probably have to get through some slow, less volatile periods in the meantime before we get the masses back for the excitement of the halving. So what happens next? Should we be worried in the meantime? There is still a couple of months to go before that halving. Today's video, let's have a look at some of the macro data and of course the facts on the charts to help us identify what goes on the black side of the chart. You've reached your home of macro cycle analysis, studying the past to forecast the future, looking at crypto, Bitcoin, the stock markets, and of course, real estate, the big one, the real estate cycle. Now, if you haven't already, we are giving out the free crypto and economic report. So hit the link in the top of the video description. That will subscribe you to the email list, and that is going out in less than 12 hours. So if you missed today's, don't worry, you'll get next week's. But today's one is a big one as we go through a few altcoins as well. We're getting a little bit degenerate out there. Link is starting to push through to fresh highs. We're also going to cover ETH today, look at some of the Solana gains, and of course, get into the macro charts themselves as we've seen very, very strong gains on the stock markets. All right, guys, let's kick it off with this fantastic look at the markets, the market psychology before we get into those charts. This is the important part. Do not skip this part. Essentially, this is how most of us view the markets, which is why looking forward is so much more difficult than looking back. Looking back, everything has already happened. And typically what we do is expect the exact same thing to happen. Or we look back to the past and say, well, the market has been here before. We would expect the market has to come back and test those prices, test those previous tops, test those bottoms, and that's where I'm going to get in again. In hindsight, it seems pretty easy, but as you may know, as we continue forward, it's not that simple. And if we can get an idea of how we can view the past and the future, that'll help us set ourselves up in our risk management. So this is a fantastic look at that. I think this chart lays it all out perfectly well. How we view the past versus the future. Your job isn't to predict the future, but to take risks and manage cash wisely. If you can't get to understand this, it's not going to matter how many intellectuals you surround yourself with. So it doesn't matter how many times you watch my videos or anyone else online. It's not going to matter. You have to learn how to manage the risk. And what we try to do here on the channel is understand what risk lies ahead. Could this market go down a lot or a little? And then decide if we see those things happen, how much do we load up because of the expectation or the probabilities of the market only going so far, as opposed to what some of the masses might think. The market might go even further. You may have lived through this already when the banking crisis happened in 2023. We were prepared for this because we were expecting a higher low to form in the market. But you might remember 12 months ago, the masses were screaming for lower and lower prices. Some of the big names out there, which are starting to die off because people are seeing how full of poop they are when it comes to forward expectations. At the time, 2023, which is essentially a straight up year, they were looking for lower and lower prices. So rather than managing the risk there by loading up because you're at lower prices already, they waited around to see even lower prices. So now they have to chase their tail on the way up and start to load up heavier rather than load up heavier at the bottom. So if you can understand that, that's how you can stay safe in the market, by recognizing where the lows might be, protecting yourself in case there is further downside, but then getting in when those lows are confirmed, which is exactly what we were doing here on the channel at that time. As a savvy investor or trader, knowing the risks is inherent to investing. You are better advised to know yourself as an investor or trader than attempt to manage risk you don't or can't even take. So if you can't take the risk, this is not the game for you. Now, there are two sides to that. Maybe you just don't want to do super short-term trading. The longer-term stuff might suit you better. So that's where you have to look at the timeframes and then your risk management on the timeframes. Let's take a look forward to the S&P 500. So what we've seen in 2023, which is what this white box is a straight up market with two significant corrections. Although 2023 did feel like it was the end of the world, the market did go basically straight up. It was an up year. Within that, we had a very strong move from March into July. And all I've done here with this white line is copy that exact strength of the move. So it's the exact time, so how many weeks there, and then of course the exact price, how much in terms of the point move, and just applying that to this stage of the run. So as you can see, this run has actually outpaced the previous run. Now, on the one hand, that's strong. On the other hand, it will probably need a significant correction to either come back to this line or go under it and then come back to test that line again to see if it can keep up with the pace that it has been putting in. When is this correction coming? We want to understand what happens first. We want to continue to uncover some of the data moving forward to see whether there is the possibility of it correcting in the short term, but also continuing up in the longer term. Remember, the market doesn't go up in a straight line. We just want to see whether it does some of these pullbacks and give us another buying opportunity. Turning to some data on the large caps and the small and mid caps, we can see that the market is not overvalued, but it can seem overvalued in some of the stocks. The red line is showing where the overvaluation might lie, and the blue and the green is essentially the mid and small caps, which are still undervalued compared to the larger caps. Now, the larger caps obviously have more of the market share, so when they move, the market essentially moves along with them, and the smaller and mid caps don't necessarily move the indice, which is the S&P 500 or the NASDAQ or Dow Jones. They don't necessarily move the market as much as the large caps do, but you can still see that they are relatively undervalued, so they still have some room to move to the upside, as they have done in the history that we can see here of nearly 20 years there, going back to the GFC. So in the short term, we may get corrections, but in the long term, the market could seem expensive because we're at all-time highs, but that's not for all stocks, and it's not for most of the stocks. Most of the stocks are small and mid caps, they're not large caps. So these can still run up higher. The flip side to that, well, it's kind of on the same side, is that even though they can seem expensive, even though the market can seem ridiculously overpriced, and how the hell can these things continue up with their valuations? Remember the old quote from John Keynes: markets can remain irrational longer than you can remain solvent. And that goes in both directions, up and down. These markets have been going up since 2009 with a few significant corrections. 2015, you got another one in 18, obviously 2020, which was very, very quick. We had 2022, which is pretty much the longest one since the 2009 low, and a couple of minor ones here in 2010 and 2011, which at the time felt probably way more significant than the majority of these moves, corrections that we've seen in the last 10 or so years, because this was straight out of the global financial crisis, which lasted about 18 months. So looking at the past, it's obvious and full of missed opportunities. Looking to the future, it's unpredictable, full of risk. If we listen to the media, the market should be collapsing every single day because of the amount of fear that they present to us, and I guess data and reason why the market should be collapsing. But as we can see over the long term, the markets typically go up. And as we looked at in yesterday's video, which is another reason to hit that subscribe button, I'll leave a link to that at the end of this video. Another reason for the markets continue up based on the data is, well, essentially over the course of almost 100 years, 74% of the time, the markets are up at the end of the year. So 3 out of 4 years, the markets are up. As for the short term, it definitely looks like we are getting a little bit overheated compared to the previous moves to the upside. Eventually, I think we'll have to come back and test the strength to the upside. Now, I've got a little more data on that coming up as to what happens in the short term, looking at those cycles across 2024, which of course will help us for Bitcoin and the altcoins to see what goes on there as well, if we're starting to see that risk come into the markets. Now, once these markets do break out into all-time highs, it doesn't necessarily have to be mega corrections. Look at what happened in 2020 into 2021. These corrections weren't anything overly severe, and they barely broke down on the weekly chart. Some of them obviously did break down on the weekly chart here, looking at the swing indicator. Here is your TIA gain swing indicator. Fantastic tool for trading and investing, setting profit targets, putting in stop losses. There's a 7-day free trial along with a educational content on the daily to help you use that particular tool. So as we can see here, the move to the upside does not necessarily have to have significant corrections. Probably the biggest one through 2021 was 6.36%. And barring the COVID collapse, you had a couple here in September and October ranging down to 10.8. Now we've seen one of those 10.8 corrections going back in 2023. There it is, 10.75, basically dead on to the correction there. So are we going to see more double digits or possibly more single digits? We'll wait and see what the market says. The evidence leans towards the single digits, as you can see here for this entire move up. Basically had one double digit correction with the rest of them being single digits until we got to that peak. This typically happens when the market runs into a new all-time high. You see 2013 continued up, continued up, continued up. We had the corrections in 2015, continued up, correction 2018, 2020, as we went through before. So corrections, natural, shorter term stuff when the market starts to run away from the speed that it's once done. Typically, you'll see it come back to those areas. How far? Well, as we just looked at, the majority of the time it is those single digits, but it can be a double digit, typically not too much, considering you've already seen multiple double digits along the way in 2022, seen one of them in 2023. So the probability of more of those happening in the year is less likely, not unlikely. And remember, going back to managing the risk, that's what we're trying to do here. Decide and figure out what happens in this short term and long term for 2024. Speaking of 2024, it seems like it is pretty well on track with the roadmap here. Just looking at the S&P cycle composite, which includes data going all the way back to 1928. So essentially 95 years of data. Now they're putting an equal weighting on each of the cycles that they've overlaid here for the S&P, essentially taking all the years and seeing how the market reacts throughout the year, what it does in February and March and April, etc., overlaying that with the 1-year seasonal cycle. So that's every single year, which I would put less weighting on. I'd put more weighting on the 4-year and then even more weighting on the 10-year. So that's the difference that I would look at here. And it's something that we specifically do in TIA Premium. So if you want to get involved in that, make sure you are on the free crypto and economic report. You'll get a discount there to then join us as a TIA Premium member. So this is really interesting as we can see that we're on a similar track here and what happens in the short term. It's essentially what we're looking at here, as I alluded to in the intro. What can we expect? You probably see some corrections along the way leading into May or June, and then again at the end of the year before we get to the election. So I think that's quite interesting that we're treading the same sort of path right now. It's early days, and if we start to see some of these corrections, it won't be out of the ordinary for the last 95 years. See some corrections in February, March, and typically again sort of around that May, June period. Market runs up, get another one here July, comes back down into that September, October seasonal period like we saw in 2023, and of course 2022 where we got the low in October, and then from that point market seems to want to run up for November, December because, well, for one, we've got the presidential election happening at that time, and as we've covered many times before, around that period you typically see the market sell off and then run up into November, December. They're the presidential years, 2020, we've gone through it again. 2016, you had the Trump election there, and so on and so forth. So what does that mean for Bitcoin and cryptos in the short term? I think we all know what it means in the long term. Eventually, we'll have a pullback and then a pump to the upside. And so I guess I just gave it away there. In the short term, I think we still see a little more downside. And I want to cover Bitcoin, ETH, Link, Solana for you guys right now. As for BTC, I posted recently that I think we're in a rock and a hard place. The right here is 42,200, which is the bear market 50% level, top to bottom at 50%. Let's take it off log so you can see the 50% there. And to the upside, you've got a short-term 50% level. That is 43,800. It still has not been able to break above that. It's hit it a couple of times and seems like it is still trying to decide whether there is a little bit more selling left or it wants to break out and close above those levels. So for now, while we remain in this level, there is nothing else I can do here. There's no other analysis I can add to this until I see a breakdown or I see a breakout to the upside. Now, being prepared, looking at the risk of the market, if Bitcoin is to break to the downside, well, I think all of us can agree that the majority, not all, but the majority of altcoins are also going to see some downside. We're going to see downside on the USD pairings for altcoins. So basically altcoin USD, and you'll probably likely see the altcoin against its Bitcoin pairing also fall while Bitcoin is going down. That is obviously going to bring more dominance back to Bitcoin, even though the Bitcoin price could be falling, which could be a prime opportunity to be loading up on your favorite altcoins. So I've got a couple here to get through. As for Ethereum, we've been following this cycle now for, well, going on years, but just looking at where it sits in relation to the previous cycle, it seems like we're roughly at about this level before that final breakdown to that final low of ETH against its Bitcoin pairing. So essentially the cheapest price that ETH will be against Bitcoin, not against USD, but against Bitcoin. So typically this is where you would sell your Bitcoin into ETH, because from that point you could potentially, no guarantees, remember, but you could potentially see Ethereum outperform Bitcoin. That's what happened throughout this period. From 2019 to 2021, Ethereum did 447% more than BTC through that period, just based on the chart alone. So call it roughly 5 times more. If Ethereum was $1,000 going to 5,000, Bitcoin wouldn't have done as much in that period. That's what we're anticipating over the next few months. Ethereum bottoming around here, going through a bit of consolidation, then a break back above, and then on with the show into the altcoin season. So with that in mind, let's take a look at Link, which has been going on its own altcoin run while the rest of the market has been holding up, well, basically going nowhere. Ethereum basically going nowhere. Bitcoin basically going nowhere as well over the last week and a half. But if you wanted to add in, since December, it's been in a pretty well trading range between 41 and 45,000, bar the ETF excitement and the quick dip to the ETF correction at 38.5. So essentially range bound for 2 months with all of that hype, all of that hysteria about the ETF, all of your favorite moon boys and moon girls like Kathy Wood and, I don't know, Max Kaiser and the rest of the morons calling for $500K $1 million Bitcoin. Well, price has gone nowhere. And I can see what I've just drawn on the chart there. So let's erase that and follow on with Link. Now, Link has been pushing to higher prices, and this is against its BTC value, which would mean while Bitcoin remains relatively stable, you would see the Link USD price continuing up. And so that's what you want to see in an altcoin that you are accumulating. You want to see it going up against Bitcoin when Bitcoin is potentially pausing or struggling, going down, because that shows you the strength in the altcoin. So that is the basis of how to pick your altcoins for the altcoin season. Find those strong ones that are essentially bucking the trend, bucking what Bitcoin is doing. They've gone through a huge accumulation and are attempting to break out to higher prices. In the case of Link, from May 22, which essentially was the DeFi collapse, the bottom there, through to when it broke out in October 23, it's done a roughly 74 week accumulation period. And the strength to Link is that it broke higher, consolidated again, and so far is breaking higher again. So that's a good sign to see in any altcoin that you have been accumulating or are buying on the breakouts, which is essentially confirmation. You're just paying a premium for it, which is your insurance that it actually breaks out. So there's no harm in buying an altcoin as it breaks out. Just keep your stops in play at significant levels, which is why we specifically look at the Gann swing indicator that tells us where some of those specific stop prices are. A nice quick indicator that you can turn on and off and obviously adjust to your own timeframes. Now, from one strength to something that may not be in as much strength now. Not having to go at any Solana players. You guys that have been buying up low and selling, hopefully, selling up higher, have been making the gains. Now, Solana could go further, so maybe you don't want to sell now. I don't care. I don't want to hear about it in the comments, but if you do leave comments about it, it just helps the algorithm. So there's your chance to help out with the algorithm. Like and subscribe right now. We've got plenty more coming up. especially with the macro cycle as we lead into these next stages of the market. And I've got some bigger stuff I wanted to share with you as well. Continue to follow up on this. This is incredible, and the bigger seasonal 10-year cycles as well. But going back to Solana before I get too carried away with the macro, Solana pushing up. This on a smaller term time frame, which is okay, seems to be very similar to what happened at the all-time high. What happened after the all-time high? A collapse. What happens now? I'm saying maybe there is still a pullback, but I don't think there's going to be a mega collapse like this. If there is, you will see it. Check the lows on the market, check the next lows. If it continues to break down from this low and this low and this low, so they are the significant lows here on your weekly swing indicator, then you would have to assume that Solana is going to be weak in the next bull market. That's all I can say about this before I start to trigger some who think Solana has got the next biggest thing in the ETH killer. It can be. And how will that happen? Well, it'll pull back to somewhere in this zone here, around 170,000 or 160-ish thousand to about 200,000 Satoshis, consolidate again, and then start to break higher. Absolutely okay. You probably want to see that if you are a massive Solana bull. You want to see all of the late people that got in here get washed out because they're not going to be the strong hands. They're not going to be your diamond hands that hold this thing into the next cycle. They are all the late people who are just trying to get on a trend, and essentially you want to see them washed out. You want to fade them. Hopefully it holds up above these levels, as I just pointed out, consolidates, and then starts to move higher. As a mega bull, that's what you want to see happen to Solana. Get rid of the weak. The strong start to consolidate and accumulate again, unfortunately at higher prices, but that's the price we pay for a strong altcoin. Now, the reason I think this is possibly a complacency is, let's bring up the chart, our Wall Street cheat sheet. You can see that we get the complacency, the anxiety, denial, panic. But as I said, in this case, it might not be as deep as what happened in the bear market because, well, as we've covered before, it doesn't seem like we are in the midst of a bear market. It seems like we're in the early stages of a bull where the market essentially has done this. You had the anger, you've had the move down into depression, this low right here, September 2023. The news for Solana and FTX was that FTX was going to dump their 80% of the SOL that they had, and that was going to dump SOL, and it didn't. That marked the exact bottom of Solana, and then of course it pumped from that point. So here is your massive disbelief pump, but all pumps need a correction. So if we get that correction, that's going to be a good thing. Then we start to head up into the hope, optimism, etc., and you get your nice big solid bull market that you'd all been hoping for. So for Bitcoin in the immediate term, you want to be watching 42,200, which was at 50% level. The low for the last 2 days has come in almost dead on that number. So if we start to see that breakdown, you probably see it come back to test the next low, and then it could be a quick run into this zone right here, which for prices are roughly 41,500 down to about $40,000. That could send altcoins bleeding. That's what we want to see. That is the correction, the entry point over this period of time where we want to get in for those 25, 50, 100x juicy altcoin gains coming later in 2024 and 2025. But unfortunately, we got to hopefully, well, in this case, it's unfortunate, but hopeful we get the early pain to get in and then wait for that next stage. I've had fun presenting you with the data for the macro cycles and of course, Bitcoin and cryptos. Channel sponsors down below, use those links and you can get access to our free trading workshops coming up, absolutely free using those specific links. Guys, I'll see you at the next video. Share, like, subscribe. Until then, take care and peace out.